But Sudip Bandyopadhyay too joins in on the show right now. Sudip, hi, afternoon. Good to have you on the show as always. Sudip, seems like the market is definitely going to pause here, if not dip, especially in the context of the speedy rally that we had ever since the state election verdict.
Absolutely, Aisha. I think we had a fantastic rally and a little bit of consolidation, little bit of pause, and also some amount of profit booking is not anything to get unduly perturbed about. I think this is good for the health of the market. Bit of consolidation is good. Of course, this came on the back of strong US economic data, and that probably led to the feeling that US Fed may not start the cuts immediately, and that led to the bit of a risk aversion amongst the FIIs, and that did spook the markets globally. India is also a part of that. Yesterday we had seen corrections. Today we had a smart recovery, but some amount of caution is creeping in. Remember, we are also heading to a result season. Day after tomorrow onwards, the IT big companies start announcing the results, and market will take cues from the results and move on. I think the next main trigger, apart from the results, will be the budget on 1st February.
There's an individual counter which I want to discuss with you, Sudeep, and that is Phoenix Limited. If you look at the last 1 year chart of Phoenix, it rallied hard, went into a sideways correction and some kind of comeback. Just look at today's action also. It's going into a new territory of 2700 odd. I was looking at income tax filing data. Till 31st of December, the data shows 82 million people have filed for income tax. And guess what? Those taxpayers earning between 5 lakhs to 10 lakhs have actually tripled in the last 3-4 years. This is essentially the mall-going population, and the way these guys have charted a tier 2, tier 3 expansion strategy. Do you think this is a nice play for a 2 to 3 year period, the Phoenix Mills, which actually has Phoenix malls all across?
Absolutely. In fact, you're absolutely right in stating that they have charted a fantastic tier 2, tier 3 strategy. You will see gleaming malls of Phoenix in cities like Indore, Lucknow, and the likes. And this strategy is, I think, working very well for Phoenix. Also remember that, the consumption theme, overall consumption theme is strong. We may see a bit of a dip here and there on the consumer durable and FMCG companies numbers. That's on the back of a little bit of softening in rural consumption, but urban consumption is strong, and that to an extent gets reflected in what's happening at the malls. So obviously Phoenix is reaping the benefit. Also, they have raised quite a lot of funding from credible sources, and a lot of new projects are in the offing. Yes, for a 2-3 year period, Phoenix definitely is a good buy, even at current levels.
Sudeep, let's not stop there. Other than Phoenix Mills, any other interesting ideas that you're working with for the long haul, of course?
Well, I think some of these companies, like we were looking at CG Power, and I think that's one company which is poised for a big opportunity, and I'm pretty confident that the quality of management will enable them to seize that opportunity. I think pretty much all the business segments they are in, there is a fantastic traction, and they will definitely reap the rewards. And that is one company where I'm reasonably confident that things should move in the positive territory from here on as well. And one can look at buying that. Larsen, of course, continues to be my all-time favorite, and they continue to remain my favorite, Aisha. If you do a peer comparison vis-a-vis ABB, Siemens, and many other stocks in the cap goods space, I think Larsen is still quoting at a very reasonable valuation. So Larsen definitely one should have in their investment portfolio. If they don't have it, buy it now.
CG Power, L&T should be part of your portfolios for the longer haul, and of course L&T part of the core portfolio. But Sudip, stay with us. In the run-up to the vote-in account, we've got some special news lined up, and we understand from our sources that the government will not be going slow on capital expenditure in the interim budget. In fact, ET Now has been learning from our sources that it will announce a 10 to 15% proportionate hike before the final budget is announced in July by the new government. Prakash Priyadarshi, my colleague, has more details. Prakash?
Yes, we are learning from our sources that the government is likely to make better balance between fiscal prudence and capital expenditure target in the interim budget. Sources are informing that despite being an election year, government will go ahead with the realistic capital expenditure target, and proportionate announcement could be made in the interim budget. Sources are informing that capital expenditure target is likely to see 10 to 15% increase as compared to last year, and some key infrastructure sectors like railways, housing and NHI will see higher allocation. Allocation for these sectors may be increased by 10 to 25%. We are also given to understand that despite being an election year, government will stick to its fiscal management target, and there will be better balance between revenue collection and expenditure. Sources are also informing that the tax and non-tax collection will be taken into account before making any such announcement, and the government will try to achieve 5.9% fiscal deficit target for the financial year 2024 and 4.5% fiscal deficit target till 2026.
5.9 for 24 and 4.5% for 26. Sudip, how do you think the street would react to this assessment on fiscal deficit?
I think that this should be pretty calm. There is no problem with that, Ajay. And I think one other thing I must point out that the decision to continue spending on account of capital expenditure even in an interim budget or during the election year, I think is a very, very good move. Forget politics, forget elections, forget everything. Why should the economy be slowed down when there is an election coming? I mean, that's absolutely not fair. So economy should continue to chug along the way it's supposed to chug along while elections and other things keep happening. That's how it should be, and that's how I think the government is deciding very rightly on those lines.
And I was just discussing, Sudip, moments back, that what do you think the government, if they continue in their position, would do differently? There is a camp which is looking for new triggers. What new reform areas would they actually press upon? The other camp believes that they may continue with doing more of what they've been doing in the first 9 years. So more of land, real estate, and this kind of reforms in infrastructure, roads, etc. Which camp are you? You think they'll have some new cards on reform front, or more of what they've already been doing?
Well, I think they will definitely, Ajay, continue to do what they are doing. But I would hope and pray that they do lot many more things. I think one area where I'm a little surprised that in spite of all the good intention, the divestment thing has not moved really, and that's really unfortunate. While the government is doing pretty good on the fiscal front, that doesn't take away from the fact that disinvestment has been a kind of a disaster. We haven't been able to meet targets ever really, and the market is at the level at which we are. I think it makes tremendous sense for a government also to do disinvestment periodically in a structured manner so that those resources become available for the government to do newer capital expenditure and newer projects. So I think disinvestment is one area which needs a rethink, and there needs to be a structured, calibrated approach to disinvestment on a continuous basis. Like today, we are sure, as you are rightly saying, that the infrastructure work will continue, irrespective of whatever happens. I would like a scenario where disinvestment continues irrespective of whatever happens. I think that's what one single thing I would like to look. I think it has been on the agenda of every government for last 15-20 years. But somehow this has not been achieved, and this needs to be done.
Interesting. Yeah, that's been a long wait, right? The disinvestment process. But, just Sudip, to pick up on the point on more of the same, more spend on infrastructure and more focus there. Other than L&T, which we talked about, which should be a must-have in everyone's core portfolio, what are the other ways of, getting exposure to this thinking of the government?
Well, there are 2-3 areas, Aisha, where there is a lot of work already happening. I can't talk about the future. One is, of course, defense make in India. The second, I would say, this entire railway sector. The third is the power sector. Now, this and the power includes gas and pretty much everything which goes to generate power or transmit power or bring power to homes. So these 3 areas, tremendous amount of work is going on, and I think election, no election, this will continue. Amongst these three sectors, my belief is that defense has pretty much run ahead of the ground reality. The share prices have run pretty ahead of the ground realities. So time consolidation is definitely on the cards. As far as railway stocks are concerned, I would maintain the same view that the run-up has been very sharp and time correction is warranted. However, the entire power sector, now there are power generators, there are transmitters, there are gas distribution companies, gas producing companies, and a whole lot of ancillary companies. Now, this is one area where I strongly believe there are still excellent opportunities, and all these companies have a significant opportunity of exponential expansion over the next 5, 7, 10 years. So, if you don't want to do hard work, go and buy NTPC. There is absolutely no problem. Now, NTPC was a thermal energy company ordering boilers to BHEL. Now, apart from doing all that and more, they are also a green energy company. And that, that corporate restructuring or creating a separate company may happen at some point of time. Even without that, I think it's now two companies, one green energy company, one thermal power company inside NTPC, and definitely deserves even better valuation. One can look at JSW Energy, one can look at Tata Power. I mean, all these are good stocks to buy for 2, 3, 5 year time horizon. You can look at power ancillaries, you can look at gas distribution companies. I think this is one area where there is still valuation pickup opportunities.
There's also one stock from the Kirloskar Group. Nuresh, I want to check with you on the charts. Kirloskar Oil Engines. Look at how industry is shot up, and right after that, oil engine in the last 2 minutes has shot up. If you look at the longer term chart, you would see from its high that retraced a bit. Is it ready to go back to its previous highs?
So this is a stock which is tough to trade because it's been a very slow and steady mover, not many major moves on a daily basis. And over the last 1 year, the stock has done really well after the big Kirloskar breakout post the analyst meet. Since now, from that point of time, from 300, the stock has gone up to 650, 700 levels. So at current levels, one could trail on to the position of the stop loss at 650, but not the best stock to trade given the slow and steady move.
Not the best stock to trade, but yes, it has given a very good move in the last another stock. In fact, I would like to talk to you about it, Kunal, because you track Puri Finance. It's Kirloskar's neighbors right there in Pune. From 450, it went to 220, and ever since Keki Mistry has come there as an advisor, the stock has retraced all the losses and making into new 52-week highs. Is it going towards 500 or higher?
I think 500 should now be a matter of few days.
Okay.
Looking at the way the stock has rallied. So I think in the last 3 months, the stock has moved from 350 levels to now 470, 475, where it's trading. In the last just a couple of days, the stock has moved up from, I think, 440 levels to 475. So looking at the way the stock has moved up in the last 3 months, in the last 3 days, I think the momentum is extremely charged up for the stock. And I was, I scanned through this across multiple time frames for the stock in terms of volume breakouts, indicator breakouts, and this looks like a stock which is now getting warmed up into a much more longer term uptrend. So 500 could just be a matter of few days, but I would probably sense that the stock should be good for much more higher levels even from those points.
Okay, that's the take coming in. And Poonawalla FinCorp, of course, has had a phenomenal ride of late, and that stock still continues to hold high, 3.5% higher as we speak. Can we take it across to Samir and get in some more info on the textile sector? Yes. In fact, the textile space comes into the fore as the union government, as we understand, has set aside a $100 billion export target as well by 2030. And it's learned that FTAs with countries like Australia, UK, Canada, among many others, are all set to open new opportunities for textile exports. Samir Dikshit joins in with more details.
A number of initiatives have been taken by the government to strengthen the entire textile, ecosystem, which will help in, improving our manufacturing capabilities and make us more and more competitive in the global market. So one of them is, of course, the PLI scheme, where we are hoping that, with the scale and size that our participating companies would be able to achieve, it will lead to economies of scale and, bring down their cost and make them more competitive. We are also focusing in the PLI schemes on the sunrise sectors of MMF apparel, MMF fabric, and technical textiles, which have a lot of potential in the global market.
You have set an ambitious target of $100 billion export by 2030. That's quite a big task. FTAs alone, how much it's gonna support it? And in addition to this, would you also like to explore some new market, if any name it is there in the pipeline? You want to share that?
Yes, we are looking at achieving an export target of 100 billion by 2030, and in fact within that we are also looking at achieving about 10 billion from technical textiles alone. We are presently at about 2 billion technical textiles. So yes, we do have an ambitious target, but it's we are working towards that through the initiatives which I've just mentioned. And in fact, in technical textiles, we also have a national technical textile mission, which is looking at enhancing our innovation and research capacity in technical textiles and developing more and more applications which will find a market. And also promoting exports. So our focus is sort of it's a multi-dimensional approach towards achieving this target, and we are hopeful that our industry is very dynamic, and the industry is fully sort of how should I say, even excited about coming together, and all these stakeholders working together to achieve this sort of a vision that we have for the textile sector.
That was the Textiles Sector talking about $100 billion potential textile export target which India is setting up. Well, while all of this is very ambitious and very welcome, Sudip, but the fact of the matter is that every now and then, competition from our neighbors in Vietnam and Bangladesh also surges. Do you think Indian companies like Gokaldas and many others can really fight this competition and still, make a mark on exports front? Would you buy them?
Absolutely, Ajay, they can definitely fight. And some of these FTAs which are being currently negotiated by the government, particularly the UK-India FTA and some other FTAs can swing the thing in their favor, the balance in their favor in a very, very big way. Indian textile companies have world-class manufacturing capabilities at this stage. Their products are appreciated world over, and just a little bit of help by way of FTAs and appropriate trade agreements can take them to a different level altogether. And I don't think Vietnam or Bangladesh or some other smaller Southeast Asian nations can compete with the scale and size which India can produce. So yes, Gokaldas and many others, why only Gokaldas, many other Indian textile companies, Indian terry towel companies, Indian technical textile companies can really be world-class players in the global stage.
Right. Okay, that's the take coming in on where the export story is headed, especially for the textile plays. But let me take it across to Sharad, find out what the dealing room chatter as well is and what are the stocks which are being talked about. Sharad?
In focus is latent view technologies, and what we are hearing from the dealers and the buzz is that strong buying is coming in from certain counters in the HNI segment. Now, even if you look at the volumes itself, that has come up almost 3 times its 20-day average, and importantly the stock has snapped its 3-day losing streak and going past the important 50 DMA mark as well. Now the key DIs already invested in the stock includes the name of ABSL Mutual Fund as well. Now importantly, the Q3 numbers will be coming on January the 29th, and the street is expecting the management commentary, especially coming in from the European markets and the margin outlook going ahead.
Okay, that's the stock being talked about, latent view across dealing rooms, of course, holding up 4.5% as well as we speak right now. Before we wind up, Sudeep, have to take a call on IT as well, because soon we'll have the IT majors, come out and announce their numbers. Any scope of a surprise here, or you think it's much in the price that it's going to be another weak quarter?
Well, definitely it's going to be a weak quarter. I think, Aisha, more than the profit and loss numbers, what the market will be watching is the commentary, and that is what may bring in some surprises. If you recollect earlier quarters also, the management commentary is what led to the price correction and the other way around. So this quarter also the management committee will be very important. I will be very keenly watching Wipro. There has been a lot of turmoil, question of or the rumor of a management change and things like that. And they of course are most attractively priced among the big 4 IT companies. So I'll be watching Wipro very carefully.
Wipro on the radar. That's the word coming in from Sudip. Sudip, good to have you on the show. We'll let you go on that note.